Well, the real estate sector was one of the worst performers on the TSX last year as commercial, industrial and residential REITs were all hit hard by high lending rates. But with the Bank of Canada signaling this week that rate cuts could be on the horizon, the outlook for the sector could be poised to change. To discuss where he thinks the winners and losers might be for 2024, I'm joined by Gaurav Mathur, Director of REIT Research at Laurentian Bank Securities. Thanks so much for coming in today.
Thank you for having me on the show.
So, are we at a sort of inflection point here that people might want to start to consider REITs in this environment where there could be cuts to interest rates coming on the horizon? Could that change things?
Absolutely. I think we've seen 2023 being particularly harsh on the Canadian REIT sector. Some of the exuberance mid-October, we saw the REIT index sort of jump back up in positive territory. But we still don't think we're out of the woods yet. Rate cuts is just one part of the equation. There are other factors too. And we're calling on investors to be more tactical as the year unfolds, rather than being in a set it and forget it mode. Okay,
so what are some of those other factors that we should be keeping, front of mind?
Well, the cost of debt is still not going down materially, and that's going to play havoc across cash flow metrics. We are looking at some of the fundamentals soften in certain sectors as well. There is an affordability crisis that Canada's sort of going through at the moment as well. So it's going to be an amalgamation of a lot of things, which will lead to more volatile times in the market. Traders continue to, put in or factor in larger bets than we think would be on the table. And all of it together provides for a very exciting time for the sector ahead.
Okay, so are there particular areas that you would be, shying away from still in this environment when it comes to REITs in the year ahead? I mean, that there might be challenges that just can't be overcome in the next year?
Absolutely. I think, one of the most favorite sectors that's been beaten up a lot, especially in the headlines, has been office. But, this is where we make the bifurcation. We are very bullish on trophy assets and on office spaces that, the tenants want to be in. There's a lot of office product out there which will be up for development, and you've got to figure out highest and best use. Similarly, that same story plays out in some parts of retail as well. I'd say we're a lot more bullish on industrial and multifamily as two sectors together, where we see industrial being a bit of a wild card as far as 2024 is concerned. And we think it could really outshoot everybody in 2024.
Why do you think industrial is a bit of a wild card?
Well, that's mostly because, a lot of the headlines talk about supply risk, and we think that's being met very well with the demand currently in the market. There's still a little bit of oncoming supply as well. There are a lot of foreign investors sitting on the sidelines, and they are waiting and itching to get into the market as well. Once the transaction market opens, we will see more activity, and it'll be a matter of timing.
And when you're looking in the retail space, you like retail that is, anchored with grocery stores and that kind of thing?
Yes, absolutely. Grocery anchored as a product is doing very well. We also like enclosed malls, strip malls, and community centers. Basically, assets that are in well-located, high-traffic areas, and where the tenants are reporting profitability over everything else.
Now, your sort of picks or recommendations, you've kind of categorized them into, you had pairs, you've got alpha, deep value, and income. So can you just first of all, just sort of walk us through how you separated them into those sort of categories?
Of course. Investors, as you've been calling on them to be tactical in the year ahead, we truly believe that, one size doesn't fit all. It has to be customized and tailored. For a lot of long-only funds out there, we have our long pair trading ideas. They're Granite and Dream Industrial together for the industrial sector, CapREIT and Boardwalk for multifamily, and Primaris and Main Street, for Torque up ahead. And then for Alpha, we're calling on investors to own Nexus Industrial REIT, Primaris, and Interrent. Lastly, I'd say for our income investors, it's a basket of very good names: Allied Properties, like Grocery REIT, Pro REIT, among others. And then for deep value, we have BSR and Allied Properties REIT.
And so if you had to pick a top pick out of your top picks, what would you break down for us, in terms of maybe one that people don't necessarily think of, first of all, but you think maybe they should take a second look at right now or something along those lines?
Well, just given that we talked about retail, I'd say Primaris is one of our favorites on the desk. We do see it being used in multiple strategies across the board. It's an enclosed mall player. The balance sheet is very healthy. They have a very strong transaction pipeline. They're producing cash flow growth in the space, and I think it's among the highest in the entire sector for retail. And they've got a fantastic management team backing them. So that's definitely one name that we put up on the boat.
Okay.